Welcome to the deep dive. We're jumping straight into Coherent Corp today. Ticker COHR.
Yep, the materials, networking, and laser giant. We're looking at their latest financials.
Exactly. We've got a few guru-focused articles, their Q3 FY25 earnings called Transcript, the official release.
Lots to dig into.
Our mission really is to unpack all this, figure out what's driving their performance, what it means going forward.
Right. The big question is, what are the key takeaways from these Q3 earnings? And what do these sources tell us about their strategy, their market position?
Okay, let's dive in. The Q3 numbers. Pretty impressive right off the bat.
They really are.
Record revenue, $1.5 billion.
Which is what, 24% up from last year's Q3?
Yeah, $1.21 billion last year. And they beat analyst estimates, too. Analysts were thinking more like $1.44 billion.
So a solid beat on the top line. And profitability.
Also very strong. Non-GAAP EPS came in at 91 cents.
91 cents. Wow, the estimate was only $1.33.
Exactly. And year over year, that's a huge jump, like 139%. It was $0.38 back in Q3 FY24.
So they're not just making more sales, they're keeping more of it as profit. That's key.
And their efficiency seems to be improving. Look at the margins. GAAP gross margin up to 35.2%. That's 491 basis points higher year over year.
And the non-GAAP?
Also up significantly. 38.5%, which is 490 basis points higher.
Almost 5 full percentage points. That's a substantial improvement in how efficiently they're making their products.
It really flows through. GAAP operating income saw a massive jump, 222% year over year, hit $72 million.
That really highlights the core business strength, and I saw they paid down some debt too.
They did. $136 million of outstanding debt paid down in the quarter. Shows they're focused on financial health, not just growth.
Good sign. So what's behind all this? What's the main engine here?
Well, CEO Jim Anderson pointed squarely at AI,
Yeah.
specifically demand from AI-related data centers.
That makes sense given the market buzz.
Their data center market revenue grew 11% just from the previous quarter, and 54% compared to last year's Q3.
54%. That's explosive growth. It really shows how critical their tech is for building out that AI infrastructure.
It's not just AI, though. Telecom also looked pretty good.
Oh, yeah. What did we see there?
Third quarter in a row of sequential growth for their telecom products.
Yeah.
Up 2% sequentially, 21% year over year.
Okay, so steady progress. What's driving that?
Seems to be data center interconnect DCI, connecting those massive data centers together. Plus some improvement in the traditional transport market.
Right, so they're benefiting from both the new AI build-out and the ongoing need for faster communication networks generally. That consistency is good to see.
And they've been busy with new tech,
Yeah.
especially at the big OFC conference back in March.
Ah, yes. Optical fiber communications. Always a big showcase. What did they highlight?
They showed off 3 different designs for 1.6T transceivers. That's 1.6 terabits per second. Super fast.
Using different technologies, too.
Yeah, one based on EMLs, one on VCSELs, and one on silicon photonics, covering their bases.
EMLs, VCSELs, silicon photonics. That diverse approach is smart. Different tech fits different needs, different distances within the data center or network.
They also demoed a 400 gig differential EML. Apparently, that's like a key building block for the next generation of 3.2T transceivers.
Looking ahead already. And they won some awards there, too, didn't they?
They did. 6 of their products got innovation awards at OFC. Pretty strong validation.
Definitely signals they're pushing the envelope on the R&D front, investing heavily to stay ahead.
They also keep talking about their broad portfolio, the range of technologies they have.
And the supply chain flexibility that comes with it.
Right. They mentioned their manufacturing footprint over 60 sites, 14 countries.
Yeah.
About half in the U.S.
That geographical diversity is a big deal these days. Reduces risk.
Plus, they make key stuff in-house, like indium phosphide lasers.
Ah, vertical integration, control over critical components.
Their capacity for that tripled year over year, and they're bringing a new 6-inch production line online next quarter.
Bigger wafers usually mean lower costs per chip plus more capacity. So that's a double win. That supply chain resilience and internal production, that's a real asset.
Okay, let's break it down by segment. Networking.
That was the star, right? Given the data center demand.
Absolutely. Revenue up 10% sequentially and a huge 45% year over year.
Yeah, that tracks directly with the AI and DCI strength we talked about.
The laser segment was a bit different, down 3% sequentially.
But up year over year.
Yeah, up 4% year over year, driven by demand in display manufacturing equipment and semi-cap equipment markets.
So more mixed. Some industrial pockets are strong, others maybe less so.
And then materials, down 3% sequentially, 1% year over year.
What was the reason there?
primarily softness in consumer electronics.
Okay. That's a headwind we're seeing across the board for many companies tied to consumer gadgets right now.
Looking at the broader industrial picture, it's interesting. They saw good year-over-year growth in things like semiconductor and display equipment.
Right, the specific areas we mentioned for lasers.
But they noted softer demand in like general industrial markets, and they're actually taking a more cautious view there for the near term. Macroeconomic uncertainty, they said.
Makes sense. A lot of caution out there about the broader economy. Did any industrial areas do well?
Aerospace and defense. Good growth both sequentially and year over year.
Okay, so A&D is providing some counterbalance, so that diversification helps.
So with all this going on, they're also doing some housekeeping. Portfolio optimization.
Streamlining the business, what are they doing?
They're exiting some non-core product lines. For example, they're stopping development on silicon carbide devices and modules.
Focusing just on the underlying displays, substrates, and EPI instead.
Exactly. Playing to their material strength there. And they're planning to sell an underutilized facility in Illinois.
Smart moves. Concentrate investment where it matters most for growth and profit, sharpening the focus.
All right, let's look ahead. Q4 guidance. What are they expecting?
Give us the numbers.
Revenue between $1.425 billion and $1.575 billion.
So potentially flat to slightly up or down sequentially at the midpoint, roughly.
Yeah. Non-GAAP gross margin expected between 37% and 39%.
Holding pretty steady there, maybe a slight tightening at the low end compared to Q3's 38.5%.
Non-GAAP operating expenses, $290 to $310 million. And non-GAAP EPS between $0.81 and $1.01.
Again, fairly consistent with Q3 results at the midpoint. And they mentioned tariffs.
Yeah, they said current tariff policies aren't expected to have a significant impact.
Good to know. And the segment outlook for Q4.
Data center comms expected to be up sequentially again.
Continuing that strong trend.
But industrial markets expected to be down sequentially.
Which lines up with that cautious view they expressed. Okay, that paints a clear near-term picture.
What are the analysts saying about all this? Wall Street's take.
Always interesting to see.
17 analysts give it an average one-year price target of $94.43.
Okay, compared to the current price around $73, that implies quite a bit of upside.
Yeah, suggests potential upside over 35%. And the consensus recommendation from 21 brokers is 2.0.
Which usually translates to outperform or buy, generally positive.
But interestingly, Guru Focus has its own valuation metric, the GF value.
Right, their estimate of intrinsic value.
Their one-year GF value estimate is $66.95.
Oh, so that's actually below the current price, suggests maybe a minor downside, like 3–4%.
Exactly. So a bit of a split view there. Analysts bullish, GF value, suggesting it might be closer to fair value or slightly overvalued right now.
It highlights how different valuation methods can give different results. Worth keeping both perspectives in mind.
Definitely. Finally, let's just recap some key product developments they mentioned.
Beyond the OFC stuff.
Yeah, they highlighted a collaboration with NVIDIA, an ecosystem innovation partner.
NVIDIA, wow. Focused on what?
Silicon photonics and co-packaged optics for AI infrastructure. That's a big deal, partnering with the leader in AI hardware.
Absolutely. Co-packaged optics is seen as a key future technology for integrating optics closer to the chips for better performance in AI systems.
They also demoed those 200G VCSELs and detectors for the 1.6T transceivers we talked about earlier. Market-leading stuff.
Pushing the speed limits.
And they're making progress on a new product, a data center optical circuit switch, or OCS.
OCS, what's the tech there?
Uses digital liquid crystal technology. They think it has advantages over the older mechanical MEMS switches. Faster, maybe more reliable. Expecting initial revenue next calendar year, 2025.
Interesting. A new potential growth vector in the data center. And telecom products.
Just continuing the ramp of their newer 100G, 400G, and 800G ZR/ZR, plus coherent transceivers, feeding that bandwidth demand.
So lots of innovation across the board. AI partnerships, next-gen components, new system-level products like OCS, and pushing the existing telecom portfolio.
Right. So wrapping it up, Coherent had a really strong Q3 for FY25. Beat expectations on revenue, on profit.
Driven heavily by that AI data center boom, but also solid progress in optical networking generally.
And they seem very focused strategically, optimizing the portfolio, investing in growth engines, managing the supply chain.
While keeping an eye on those macroeconomic headwinds, especially in the broader industrial space.
Their diverse tech base and that resilient supply chain really seem to be key strengths right now.
Absolutely. It gives them options and buffers against shocks.
So here's a final thought for you listening. With AI evolving so rapidly and its relentless need for more data speed, How is Coherent's mix of technologies, EMLs, VCSELs, silicon photonics, indium phosphide production, and their focus on supply chain positioning them for the next wave?
Yeah, and specifically, what's the long-term play with their increased focus on EML alongside their other tech? As speeds push beyond 1.6T towards 3.2T and even higher, which technologies will win out, or will the mix continue to be crucial?
Definitely something to watch as you follow Coherent's journey. Thanks for diving deep with us.